And welcome, everybody. We're going to go ahead and get officially started now. Welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I am the manager of retirement services here at VectorVest, and I am really excited about spending the next hour or so with you. I hope you guys are excited as well. In fact, I am going to open with a very bold promise to you today. And that is, in this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. Okay, I'm going to lay the foundation, tell you some of these core strategies that will allow you to do it. First, let me tell you about myself. My name is Jim Penna, manager of retirement services. I've been with VectorVest for about 16 years now. And it's been a great run. I'm from Connecticut. I don't know. I didn't see if anybody was from Connecticut earlier. Somebody was from my hometown. We did a webcast earlier from Norwalk, Connecticut, where 2 lifetimes ago I was a police officer there for about 10 years. Left that side of the law and went to another side of the law when I became a market maker for some smaller firms and then a larger market making firm. So I worked on a trading desk for a long time. Until I decided I was tired of shoveling snow and I moved down here to North Carolina. So that's where I am now. I took my Series 7 exam back in 1992. So I've been in the business for a long time. And, it was great to have the experience before coming to VectorVest, but, understanding VectorVest and the way it works and learning from our founder and mentor, Dr. Bartolito, really, really helped me, learn even more about the overall market. So that's my background. That's who's talking to you. And I look forward again to spending the next hour where we're going to talk about a few things here. So our journey, let's walk through it quick. I'm going to introduce you to the 3 Ps of the VectorVest investing model. Okay, we're going to talk about these 3 Ps, the 3 pillars, as we call them. We'll spend just a minute or two on the 7 signs that you may not be ready for retirement. My guess is not many of you are going to fall under these, but we'll give it a shot. Then we're going to step into the actual process, right? The strategies, the tactics, right? Big difference between strategy and tactics. But we're going to talk about, first and foremost, how to protect your assets. Once you know how to protect them, we're going to talk about growing your portfolio, capital appreciation in your portfolio. We're going to talk about generating income. How you can continue to make money in retirement. I was saying earlier, you read all these articles, and the first thing I see is, well, I'm this age and this is how much money I have, will I be able to retire? And I just always remember the conversation I'm having with Dr. DeLito a long time ago. And I told him, the question I get in some form or fashion all the time is, how do I keep from running out of money in retirement? And Dr. DeLito, for those who knew him or had heard him give his presentations in the way only he could, he chuckled and he said, James, just tell him to keep making money. And he said it, kind of half kiddingly. And we put together this process for retirement services to show you how to continue to grow your portfolios. And then finally, we'll end with a Q&A session. John and I will answer any and all questions that you have. You can type them in during the presentation. I try to get through the presentation. I'm sure I'll glance over there and catch a question now and then that I think is important. John will be helping out answering questions as well. So don't worry, we'll get to all of them before we're done here. So with that, I would ask you to turn off all distractions. Try and stay focused. I know you're not going to turn your cell phone off, but maybe just put it on mute or vibrate, whatever. Try not to multitask. I want you to try and stay focused. So let's start here. After decades of working with retirees, again, VectorVest has been here for about 30 years, 35 years, somewhere in that range. We have found that the retirement investing model, this idea of retirement-minded portfolios that most people have been taught is broken at this point. The markets have changed. The industry has changed. But we do believe all it takes is a couple of minor tweaks and we can get it fixed. Our goal, one of my goals here among many tonight, is to get you on your retirement goals, objectives on solid footing. And that's what I want to be able to do here today. So I mentioned the three P's, the VectorVest investing model, which we have, I believe, proven to work, right? Hopefully you have a piece of paper, pen, notebook, whatever. Take this out, draw it out with me here. And this are what we call the three core pillars that you need in retirement. And they're profit, provide, and preserve. So we'll start with profit. When we start with profit, we're talking about growth or capital appreciation. Right? We're going to discuss different allocations of your net worth towards these three strategies to be able to grow, diversify, and protect your portfolio. So first, profit is all about growth. Good quality stocks to grow your portfolio safely and steadily each year. Then we're going to talk about provide. When we say provide, think of providing income, the system to generate a consistent income. And there are two different ways we're going to talk about doing that. I'm sorry, I didn't share my screen. I apologize. I didn't share my screen there. Thanks, guys. I got so entrenched in what I was trying to get across there, I didn't hit the share my screen button. I apologize. I was talking about the journey we were going to take here today. Okay. And we went through these things. I'm sorry. Sorry, I'm wasting your time here. We talked about the journey we're going to take. So I talked about growing our portfolio, protecting it, generating income. Turn off your cell phones. We talked about the retirement model, and these are the three P's, right? Profit, provide, and preserve. Okay. We're talking about growth. We're talking about providing income, and I'll talk about two different ways, two parts to that. And then we'll talk about preserving, okay, protecting, insuring your portfolio, which in my opinion is by far the most important core pillar here of the three P's. Because what good is growing it? What good is generating income and growing your portfolio if when the market goes against you, you have no idea how to protect it? And my new saying has been, an unrealized gain in your portfolio is not a gain. Okay? If you don't know how to protect it and preserve that capital and that growth in your portfolio, listen, there's always going to be drawdown, and we'll talk more about this in a minute, but you're always going to have some drawdown. There's always going to be volatility in the market. But, over the last 2 years, from November of 21, if you weren't prepared, you had some very serious drawdowns. And that's what we want to protect against. So we believe that when you apply these three core strategies, you have a much better chance of meeting those goals that I talked about earlier about financial freedom and enjoying the retirement that you desire, that you looking to achieve. Now, I'm going to spend just like 2 minutes walking through 7 signs that your portfolio may not be ready for retirement. Now, I know I asked, and a lot of folks in here were typing in that you're already retired or very close to retirement. But these are just very general things, and these are 7 signs. So I'm going to look at these, and you can just write down. I'm going to ask you how many of these 7 apply to you. My guess is not many of them. But first of all, we talk about, a sign that you may not be ready is that if you're approaching or if you're already in retirement, you're counting on Social Security in the U.S. at least. Not real familiar with it in Australia or Canada, but if you're counting on Social Security alone, you're probably not ready for retirement. There's many problems if you are. You read a lot of statistics. 60%, they say, of non-retired workers believe Social Security won't even be around when they retire. Those are the folks who are early on in their work life, listen, I don't believe that, but that's what the statistics tell us. That's the belief. But there is a key point here that even if it is still around, which I believe it will be, the Social Security website itself states that Social Security was never intended to be someone's sole source retirement income anyway. And remember, when it was created, the general lifespan back then was a lot shorter than it is today. So it was never intended to be someone's sole source of retirement income. It says that right on the Social Security site itself. So that's an issue if that's what you're counting on. A lot of people, number two, a lot of people just put their money away. They believe they're saving it. If you're stuffing it under your mattress, so to speak, you're putting your hard-earned money away and counting on it to be there when you retire. However, there's a problem, right? And it comes with inflation. And inflation can destroy the value of your savings if interest rates are lower than inflation, which right this moment they're not, right? So if you put them in safer investments, yeah, you might make that 1 or 2%, but there's an important number Dr. DeLito used to call the hurdle number, right? And the goal was to try to grow your portfolio by at the very least the combination of interest rates and inflation, right? So while it's smart to save, and I'm not saying don't save any money, you have to be careful because you start letting it sit there and you lose time value of that money. Another thing, if you just set and forget your portfolio, a lot of folks will just put their money in mutual funds or in an IRA, 401k, whatever it might be, and hope for the best. And unfortunately, when the market drops and wipes out 30 or 40 or more in this drawdown we've seen, many people end up delaying retirement or having to go back to work. We don't want that to happen. When all else fails, you can always play the lottery, right? Figuratively or literally, where you just start buying, really cheap penny stocks and hoping they go, or actually buying lottery tickets. Don't do that. Remember the old commercial, to advertise the lottery, it said all it takes is $1 and a dream. I'm here to tell you with my 30 years of experience that is not the best retirement plan for you to have. Maybe you're paying someone to make decisions for you. Okay, this one is a little bit on the line here. We're not saying that, financial advisors are bad. They can be great help in certain areas of financial planning. So that's not my goal here to say that, all financial advisors are bad. However, what we are saying is that when it comes to your investments, at a minimum, you need to be knowledgeable enough to at least oversee what your advisor is doing so that you can ask him the right questions, him or her, and yet make sure that, they're doing what you want them to do and what you need to be done for you. Right. If not, you could be like one of our subscribers, Rob here. He retired in 2005. As we all know, the financial crisis hit in late 2007. It sent this to us back then. His advisor told him simply write it out. By mid 2008, his portfolio had lost 40%. Retirement was in ruins. Looked like he would have to go back to work. Similar thing that happened to Carol. She hired an advisor in 2013 to help manage her inheritance after her dad had passed away. She had sent us this note as well by early 2017. That was back in 2013. By 2017, she finally had the time to look at what the broker that she had hired was doing and was shocked. And these are her words. It was a mishmash of cookie cutter funds. Net result was 1% annualized rate of return during a time when the market was doing much better. Spend less. Another sign you find you're not ready or where you should be if you're cutting back spending because you're worried that you'll run out of money. Now, listen, it's smart to be frugal and to be smart with your money. I'm not saying go out and throw it around, but if you're doing it because you're really worried about running out of money, then you may not be ready for retirement. And then finally, if you decided to work longer than you originally intended, right, typically means, you're probably not quite ready for retirement. Now, as I said earlier, right, you could work as long as you want to, right? But I always enjoy the old saying, if you're doing what you enjoy, you do what you love, you never work a day in your life. The old saying, right? I'm sure you guys have heard before. I think that's a cliche or a good old saying with a lot of truth to it. But anyway, these are just some things to think about. Check them off. We call it the retirement unreadiness checklist. Let me just ask you real quick. Again, I'm going to try to interact with you guys throughout. Type type in for me the number of these items that you might have checked off here. You know, in a general sense, maybe not to the specific literal sense here, but 1 of 7, 3 of 7, 5 of 7. Let me know where you stand on this check. Melody says 1. Rico says none. Dan says 1. Pip typed in 1.5. So yeah, a lot of ones. Rama says 4 of 7. David says 0. Michael says 3. So there's quite a mix there. We get a lot of nones, and I believe that. I think you guys are here. I believe there are certain reasons you're here. We'll talk more about it as we go through, but not because you're buying lottery tickets to try to build your retirement portfolio. Anyway, the idea here is that if you're in any sense exhibiting any of those signs or any indication that you're not comfortable in your retirement, the key here, the strategic shift I want you to take into account is that I want you to go from not being in control to taking control. And you may already have control over a lot of things, right? But I want you to take full control. These strategies that we're going to talk about will give you the techniques to both manage your own money, again, as well as give the information you need to watch over, any advisor or someone else who you might be paying to do that for you. Okay, with that in hand, let's start with the first P is preserve. Protect your assets. I like to jokingly say, I mentioned I was a police officer a long, long time ago, and I took an oath, and I still live by that oath to protect and defend, protect and serve. Now it's trying to protect and serve your net worth, help you become a better investor, and with the proper things to consider. And number one is protecting and preserving your assets. Right? Instead of worrying about the market falling and wiping away a chunk of your nest egg, you need, for those who remember the early 80s, the strategic defense system. Right? The strategic defense system to protect your assets. And a lot of people get caught by surprise when the market falls, and it should never happen that way. And after it happens, what happens to you is you hear people on TV and financial advisors and others talk about what you should do now, right, to try and make your money back. Right? That's really not very helpful when they tell you after it happens. And this has been true again, especially in recent times from late 2021 right up until today. So the idea is that you need to know how and when to insure your portfolio, to know how and when to insure your portfolio. So what I want to do on the first part of understanding how to insure your portfolio and when to protect it, I'm going to start by looking at what we call at VectorVest the market timing graph. This is what our VectorVest composite that you're looking at. And before I go any further, let me ask this question. How many folks who are in the room right now are current VectorVest subscribers? So type in either yes or no. If you're a subscriber, type yes. If not, type no. Just helps me, gives me an idea. They're coming in quick. I actually only see one no so far. A whole bunch that are. One Michael's an elite member. Wow. So well, at least for everybody who typed in, there was only one no. So that's good. So for the one person who said no, this is our market timing graph, what we call the VectorVest composite. And so what I want to do is go through and kind of first start with the 30,000 foot view and then zoom in on some specific times that we all remember when the market worked against us. And I want to do it to point out the importance of market guidance and understanding that, yes, you can time the market. I'm going to explain what we mean by timing the market, right? So let's zoom in on a couple of this is not very recent now, it's a long time ago, but I was working the trading desk when this occurred back in the .com bubble. Sure, I'm sure there's folks in here who remember that. We had a subscriber, Lynn, during the .com boom. He said he took 80 grand and increased it 5 to 6 times over. But in 2000, he proceeded to lose almost everything over the next 2 years. And again, these are his words. He was not happy and he needed someone to blame. We believe that happens way too much, right? You make money during the uptrend. If you don't know how to protect it, you end up giving it all back and you spend years trying to recover those losses and just get back to even. We don't want that to happen to you. If I click again, it takes us up to 2008, the housing bubble, right? The average mutual fund was down over 40% at that time. And we talked about Rob earlier. Remember, he said his portfolio lost 40%, thought he'd have to go back to work after retiring. And a lot of folks were in that same boat. If we fast forward to COVID, now that was February, March of 2020, where the S&P 500 fell 34%. Now that was a much quicker drawdown, but still scared a lot of people, hurt a lot of people's portfolios. And then just the last couple of years from 2000, again, late 2021, November 22nd to be exact, when we got our confirmed down call, right? The market from November of 21 to October of 22, where we kind of bottomed out there. We've had a couple of sort of rallies since, but from November 21 to October of 22, the S&P 500 was down over 30%. Let me ask you another question. If you have a financial advisor, did he or she call you leading up to any of those events that occurred? If you have a financial, they call you and say, "Hey, things are looking tough here." Yeah, it takes a minute for him to come in, but Marianne says no. Yep, big ha ha, and then no. But he says no. Yeah, a lot of folks say no. So, which brings us to to today and where the market is now. We've been in this bear market. Will the market continue to fall? A lot of folks should. If you're not worried, you should be. Still, I believe that's my take from using VectorVest, looking at the market climate graph, looking at the macro headwind. Right? You still should be nervous. You should always worry about your net worth. You should always worry about your retirement nest egg. Now, some people say you can't time the market. Can't time the market. Now, the people who say that, I agree with them. They can't because they don't know the difference of predicting the market and timing the market. And the same people who say you can't time the market in the next breath will tell you about some technical study that they, which at the end of the day is just using movements of volume or time or movement of price to predict or at least not predict, but to time where you think that individual stock or the market's going. So it's ridiculous when people say you can't time the market. What you can't do is predict the market. But you can recognize short, intermediate, and longer term trends that'll help you make better decisions. Right? So it's very rare to hear anyone on TV or a financial advisor say, "Hey, it's time to get out. The market's in a downtrend or it's about to go into a downtrend." It happens, but usually too late and very rarely does it happen. So VectorVest, and again, the point here is to show you with the proper guidance, how you can avoid this. I'll start back. I won't go all the way back to 2000, but in 2007, wrote about the confirmed down signal that came right near the all-time high in the VectorVest composite, right? Dr. D had written, we received could be the entree to a long bear market. Don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. It's not the time to buy stocks. Pretty good guidance, right? You think that guidance would have helped you if you were using VectorVest November 2nd of 2000? I know the answer to that. Even in the COVID drawdown, right? Days before the peak, we had noticed, and it had nothing to do with predicting what the COVID pandemic would do, but days before the peak, we noticed warning signals in our market timing indicators. And in our strategy section, we had written that there were what we call bearish divergence, suggested that downside risk outweighs upside potential. It doesn't get any clearer than that. that would have been pretty good advice, or at least that warning flag for you to protect your portfolio or do whatever you needed to do. Now, did we know that this was going to happen? No. We used the guidance. We didn't predict, we timed it. A week later, we said that prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market to the downside. We did it again a week later. I'm going to go through these. It's all making the same point. The proper guidance is extremely important. To know when to buy, what to buy, and when to sell is going to go a long way in helping you protect your assets. That's what the VectorVest program does. So from there, I'll segue into what we do to actually protect your entire portfolio. Now you can buy, there's a lot you can do on individual stocks. I'm just going to touch here on protecting your portfolio overall. Okay. So what we're looking at here is a screenshot I just created yesterday. It's a 1-year look back at the VectorVest composite. And obviously I could have gone back too. I just went back 1 year, a little over a year. And we're looking at, a lot of volatility, right? A good time to know how and when to protect your portfolio. So instead of going through each one, what I want to do is just take a minute or two and focus on this. I'm going to zoom in to this area, right? This most recent confirmed down call, which occurred on August the 9th. And all I want to do is share the idea of understanding when to do it. And listen, I'm not going to turn it into an options course here, but I'm going to talk about buying put options on the SPY or the S&P 500 as a way to protect your overall portfolio. So that's what I'm going to talk a little bit about here, portfolio insurance. I know there's some folks in Australia and in Canada, so it's a little different there. But I know there are some ETFs and some things you can do. I know it's not as easy as doing it on the US side of the market. Now, here's some examples, and these are live examples from real money account that we trade here in our retirement coaching group every Tuesday. So I want to use this idea of buying puts. First, what's a put option? I don't know. You don't have to type in, but I'm going to assume that you all may be new to options, right? What I want to tell you is you do not need to be an options expert, understand how to buy a protective put option. You have home insurance, car insurance, life insurance, health insurance. You know the concept of buying a put option then. Now, if you are brand new to options, understand the buyer of a put option has the right to sell for one contract 100 shares of a stock, or in this case, an ETF, at a certain price by a certain date. The value of a put option rises when the value of the underlying asset falls. If I have the right to sell a put option, now I have the VectorVest composite up here. This is not the SPY, but I'll explain that as we go through. But if I bought this is what the SPY did as well. But if I bought a put option, the SPY falls, the value of my put option rises. Very, very quick lesson for those who may be new to options. I'm going to zoom in here. This is right where we got the confirmed down on August 9th, right here. So even before that, the VectorVest color guard had a red light in the price column. It was a Tuesday session for our retirement coaching group. The market had what I call this sort of rally. And we said, okay, if you're invested anywhere close to being fully invested at this point, it's time to be protective, protect your portfolio. We went out, I bought in an actual live account, I bought 3 SPY August 454 put options. Bought 3 of them at $537 a share. Would be, so 300 shares would be $1,611 to ensure a portfolio at that time of roughly 50 grand, give or take. You have a $100,000 portfolio, consider buying 4 or 5, maybe 6 put options. $250,000 portfolio, you may want to buy up to maybe 10. And Ron says, how far out do you usually buy? Without going into the entire process and technique, will tell you we go out usually for the protective puts, usually rough guideline of 30 to 45 days out. And I buy at the money, by the way, for those who do understand put. Buying at the money 30 to 45 days out based on guidance that we give. So that trade there, that insurance policy placed on our portfolio on the 20th, on August 10th, I sold those 454 puts at $9.02 per share, or a profit. I'm going to be generous to myself and call it $1,100. Offset the damage to an asset, right? That's what an insurance policy does. I offset the damage to my assets here. And I was able, in this case, just did three. I made $1,100 to offset the drawdown. It continued on September 19th. I bought two more SPY October 441 puts. Again, these are at the money. So this is where the SPY was trading. Paid $5.52 a share or $1,100 to insure the portfolio. Was on the 19th. I'm sorry, I have the wrong date in here. It was about a week later. It wasn't many days. I'm sorry, I got the wrong date. We bought them on the 19th. And I believe it was only like the 23rd or something. It was only a few days later. The value of those options doubled. It was like the 23rd, 22nd or 3rd. The value of those options doubled because you can see what happened to the markets, even though I know this isn't the SPY, but that's what happened to the markets. We had a $1,100 profit in just a few days. This is mitigating the drawdown, protecting my assets. We did it one more time on September 27th. This time I bought four of them, the 429 puts. See how they kept falling here. Paid $6.86 per share, $2,700 to insure the portfolio. One more time. This one was also a fairly short run here on October 6th. I sold them. Not a huge profit, but I sold them at a profit. Another $456 to the. Okay. These are live trades that we did recently in this most recent from August to now drawdown. Now, because I want to be fully transparent here, I will tell you that I did buy some protective puts right in this area, and they started out profitable. Then the market had what I call a sort of rally, and we ended up giving back about $500 or $600 of that profit. Okay, so there was a losing trade. I don't want you to think every single trade I do is a winning trade. I'd be lying to you. Right? And then on a recent one, another one was profiting here, and then the market had another stronger week and gave back another few $100. But overall, it's still about a 2,000, and that's just from August, by the way. I'm not even talking about all the way to November of 20, all the way back. So it's just an indication of how you can protect your portfolios. Ron says, you don't buy a spread? And I do, Ron, but I don't have time to go into all that now. But yes, bear put spreads, I do. And Marianne says, what if the market goes up instead of down? Well, Marianne, that's a good thing for you. Right? We do have risk management techniques where we close out of them. We do take a loss on the put option. But you have to remember, this is not a trade where I'm looking to profit. I'm protecting my overall net worth here. That's the purpose of these put options. It's an insurance policy. And I'll use, because you asked that question, I'll use the analogy, right? I always say, I open my bank account every month. I look at the statement. I have a lot of ACHs, auto pays to all my monthly bills. One of them is to Geico for my car insurance. Okay. So Marianne, to your question, this is the answer, my answer to your question. When I look and see that I just paid Geico my car insurance payment, I don't get mad because a tree didn't fall on my car this month. Like I didn't need my insurance, so I wasted my money. That's a whole nother discussion, right? Insurance, but that's the idea behind it, right? What they say about insurance: better to have it and not need it than to need it and not have it. So I'm happy to give away a few bucks on the dollar here, a few pennies on the dollar, so I can sleep better, knowing that I'm not, instead of having a 40% drawdown, I might have only an 8 or 10 or 12% drawdown because I was proactive. David says, why not just use a trailing stop? You certainly can on individual stocks. But David, tell me what happens when Let's say you put a trailing stop on an individual stock that has an earnings report coming out and you want to protect that position. What happens when it gaps down 15, 20 bucks or whatever it might be, some dramatic amount? You get stopped out, the market maker robs your stock. If the stock goes back up, then, too late, you lost your stock. Put options but yes, you should have stops, you should have risk management techniques. Put options are better. Yes, and again, I have to keep moving here because I'm taking too much time on this. But as I said, capital preservation to me, growth and income are useless if you don't know what to do when the market does this. As I said earlier, an unrealized gain is not a gain, it's a paper gain, it's a paper trade. You don't know how to protect it, then it's not real. Okay, let's keep moving. Elaine was a customer of ours. He had implemented this idea here, and one of the really, it makes me feel good. This means a lot to me when they come in. He said, Jim, because of your teaching, I hedged my portfolio with puts, saved a section of my portfolio. He started with $835, putting it into put options, and it turned into over $23,000. My portfolio is not only saved, but brought positive. Very important stuff there. Let me just ask you a quick question. How much would portfolio insurance have benefited you just since August, since November of 21? I don't have to go back to 2008 or COVID or anything. You think that would have benefited you? I want you to type it in. I'm going to take a quick sip of water. Yeah, Mirko says a lot. Trip says absolutely. Yes, it would have. And as I said, with all transparency, not every one of the trades works perfectly, but we have, again, you have to have risk management techniques that allow you to cut the losses on those. And the beauty of it is that your net worth is not collapsing. You're losing money on the puts. It means your portfolio is okay. Okay. All right. The strategic shift, or second strategic shift, you need to go from being worried and unprepared about what could happen to being prepared for when it does happen, having that strategic defense system in place, understanding how to read in our, and for us, we use the VectorVest color guard and the market timing indicators to tell me when it's time to worry. Yeah, it's okay to worry, by the way. This is what I don't want you to be. I want you to worry, as a matter of fact, but in a good way. Be concerned, be aware. When I say worried, that's what I mean. I don't mean I'm sitting here like this guy. Oh my God, what am I going to do? You have to be prepared. Okay. All right. I spent a lot of time on that one. Let's move forward to the profit portion of this. We're going to talk about growing your portfolio. Now that we know how to preserve it, we're going to talk about growing your portfolio. So we need, we use the mantra here at VectorVest, right? Our mantra is to buy safe, undervalued stocks that are rising in price in a rising market. Okay. For our retirement minded investors, we want to look primarily at a stock safety. Right? We're not being super aggressive. We're not looking for those, double our portfolios in 90-day kind of trades. We're looking for the safety of the underlying stock. Because while it's fun to hit the home run, for any baseball fans out there, we know what most home run hitters do when they don't hit a home run. What do they do when they don't hit a home run? Right, exactly. Strikeout. So if you're not seeing the returns you want, the answer is not to go faster. It's not to, day trade or do whatever, right? For a retirement minded investor, what happens is when you're not growing your portfolio, you end up trading in a way that's totally opposite of what your objectives and what your goals are. And that's never good, especially in your retirement. So don't try to become a day trader or short-term trader to make your money back quickly if you do have drawdown. Now you shouldn't, because you'll be ready to buy your protected puts. But I have the car here, the driver education car, because when my kids, who are older now, but when I was teaching them how to drive, if they struggled, I wouldn't yell at them to smash down on the gas pedal, go faster, right? No, I told them to slow down. So you want to do the same thing. And it starts with this idea This quote from Dr. DeLito, again, our mentor and founder of VectorVest. And he talked about good portfolio management starts with buying the right stocks. He wrote it all the time. He said it all the time in his presentations. Think of it as a baseball team, right? I'm filling my team with great players. If I'm putting the best team on the field, they have a much better chance of winning, right? Could be field, the rink, the ice, the court, whatever sport you want to use. But if your second baseman is striking out 3 times a game and making 2 errors a game, are you going to leave him on the field? The answer should be no, right? You're going to put a better player. Same thing with your stocks. So it starts with buying good stocks. So when we're looking for safe stocks, there's kind of a checklist here that is important that Dr. DeLito used to create proprietary indicator and how we track the safety of an underlying company. And these are just some of the factors that go in. Earnings consistency. Does the company make money quarter over quarter, year over year? The company size played a part. The price volatility, not so much implied or historical volatility, if you're into that. We're not talking about options here, but I'm talking about just looking at a graph and seeing any violent moves on that underlying stock. Balance sheet stuff, debt to equity ratio. Does the company have the ability to withstand any headwinds, whether it's specific to their company or the overall economy? Right? That's taken into account. How long has the company been around? Dividend history. Good, safe stock doesn't have to pay a dividend, but if it does, it better darn well continue to pay it and grow it because, as Dr. D said, there's no greater black eye for a company than to suspend or cut or eliminate their dividend. So, a lot of information there. What I want to do is just take 2 minutes here and look at a list of stocks, very well known companies you've all familiar with, companies that I'm sure you've all given money to. All right. So I'm going to go into the VectorVest program and I'm going to click on the Viewers tab. And in the VectorVest program, I was able to create this list of stocks. Okay. I'm sure you know every one of these companies: Microsoft, Amazon, Netflix, Google, Lowe's, Verizon, Pepsi, right? You know all of these companies. So I chose these as just familiar companies for you. Now, when you build them in a watch list in the VectorVest program, they're not just randomly placed in here. They're sorted by our flagship indicator called the VST, or value safety type. What I want to talk about is this column right here, relative safety. That checklist I showed you are all the factors that go in on a 0 to 2 scale of creating this proprietary indicator, giving us the safe stocks. On a 0 to 2 scale, naturally, the higher the better. So we're sorted by VST. I could click this button and easily sort these 40 stocks by relative safety, bringing the highest RS stocks to the top of the list. If I click it again, it's going to bring the lowest RT stocks. These companies that I'm sure I've for the years. But anyway, so what I want to do is just a very, very quick illustration for you, right? This isn't some deep back test trading system that I'm laying out for you. Just want to show you the power of relative safety. You see, I sorted it, these very well-known stocks with the lowest relative safety coming to the top. I have the ability to quick test those. I'm going to just choose, I set this up. I did a random time frame going back 2 years. Why? Because we've had a good run in 2021, got hurt later, a lot of activity going on. It's just an illustration for you. So this is what that list looked like in January of 21, so a little over 2 years ago. If I quick test those stocks and compare them, just buy and hold, point A to point B, no money management, we see the S&P 500 has outperformed it by over 20%, right? That's taking these very well-known established companies and sorting them with the lowest RS coming to the top. How about if I change that to the highest RS coming to the top? Let's do the same thing. Let's run a quick test from that date and look what happens. We are now, just by a couple of percentage points, but just like that, we're now outperforming the S&P 500. But let's take it one step further, because why would you limit yourself to just these 40 stocks? And I'm just using the top 10 when in the VectorVest program, you have the ability to do it through 9,000 stocks. Well, back in January of 21, there were 7,200 stocks. So if I sort the entire 7,200 stock database back then on that date, and then I run a quick test of just the top 10, now I'm outperforming the S&P 500 by over 10 points. Not quite, almost doubling the annualized rate of return, but significantly higher with one stock that really hurt us, again, on just a buy and hold. Anyway, just a little 3-minute exercise just to give you an idea of the power of relative safety. Again, this didn't include any management techniques, any trading system and market timing or anything like that. Just wanted to show you in a quick way the power of relative safety. Okay. We have, a portfolio that we track in our coaching group that's averaged since January of 2017 a 22% return. Right? That's more than doubling your money every 3 years. If you could double your money every 3 years, or just about doubling every 3 years, buying safe stocks, how would that affect your retirement? Right? And as you type that in, just no, I'm not saying you're not going to allocate all of your money to growth stocks. This is one front of this battle that we're. So the strategic shift there is going from slow, stagnant growth, spinning your wheels, so to speak, to that steady growth that we look for. Buying good quality stocks, knowing when to buy them, and how to manage them once you do own them. That's where we get the steady growth from. Let's shift gears just a little bit. We're going to go to the final P. We talked about preserve. We talked about profit. There's 2 parts to generating income. Okay. Remember, you don't want to rely on your pension or Social Security to carry you through retirement. We talked about that. In order to continue living the lifestyle, the retirement that you choose, you really do need to open up new income streams. And it goes back to what I said earlier when Dr. D said, James, just tell them to keep making more money. There are 2 main ways that you can do that. Right? Number 1 is to build a quality dividend portfolio. Okay? We're trying to diversify your assets into your retirement. You're gonna allocate some to growth. You're gonna allocate some to income. Right? The amounts you do, I know everybody in the room is in a different place with a different sized account with different objectives, but you're going to allocate to these tactics here. So getting paid. One of the benefits, focusing on good quality stocks, especially dividend stocks, they pay a nice dividend, and what we want is a safe, growing dividend, right? But finding the best dividend paying companies for a lot of folks is not really all that easy. If you Google them, what happens is, like if you just do a general search, what a lot of people do is just chase the highest yield, thinking that's the best dividend stock. High yield very rarely translates into the best quality dividend payer that you can find. Right? Usually when you go into sites like these, they'll just sort it by the highest dividend. Okay. In the VectorVest program, I took a screenshot yesterday of a pre-built dividend watch list that we call DRIP 25 plus. DRIP stands for Dividend Reinvestment Plan. So all of these automatically reinvest if you choose to. And the 25 plus simply means that not only have they paid, but they've grown their dividend every year for at least 25 years. Again, they're sorted here by VST, with the highest ranked value, safety, timing coming to the top. We also have in the VectorVest program, when you're building quality dividend stock, we have the basics. This is the dividend paid and the yield. Whatever the yield is, divide that by the price of the stock, gives you the yield, right? We have proprietary indicators. Dividend safety on a 0. It's the one indicator in our program that's on a 0 to 99 scale. Dividend growth rate is extremely important. And then we take that yield, safety, and growth, and we turn it into a vector, just like the VST. It's the yield, safety, growth vector on a 0 to 2 scale. We favor those above one. Earnings growth rate is a huge part of quality dividend. Can they pay their dividend if they're not making money? Yeah, Ron says dividends don't help much when the stock itself is falling in price. I can, not I argue, when I say argue it with a small a. So yeah, there's going to be drawdown. A lot of these are rate sensitive. So when the rates are going up, right, we do have risk management techniques that we use. I accept a lot more drawdown on a quality dividend portfolio than I do on my growth portfolio because you have to know what your objective is, right? Of course, we're not going to allow the dividend portfolio to collapse, and that's the key. Know when to buy them, know what stocks to buy. That's the key to not allowing them to crash on you. And here is a graph of, I think it was the number 4 stock on that list I just showed. Actually, own a small portion of this. This goes all the way back to 1997. This is the price of the underlying stock. This is the dividend payout, right? What we still call, I still call golden staircase. Usually I make this a gold color, call it the golden staircase. Dividend just keeps growing. If I put the earnings per share, that would keep growing. Earnings growth rate, that's how they continue to be able to pay and grow their dividend. These are the type of dividend quality stocks you want. Yeah. Knowing when to buy them, understanding those important indicators for the quality of the dividend, not just chasing height. We have a portfolio in our retirement coaching group that's just about 10 years old now. When you add the dividend payouts to it, we're looking at about an 18% annualized rate of return. Now, it's not through the roof. It's not designed to be your growth portfolio. It's got some drawdown, but when we use the protective puts, when we use other means of protecting that portfolio, we can mitigate the drawdown. And if anyone doesn't think that a quality dividend portfolio averaging 18% annualized rate of return, the compounded rate of return of about 11 or 12, you don't think that's good enough, you need to call me. Because it is good. Okay. Part 2 of collecting rent or generating income. We call it collecting rent from the stocks that you own. And this goes back the same idea of you don't have to be an options expert to understand how to buy a protective put. Right? It takes a little bit of effort if you're brand new to options to understand how to do it. Yes. But you don't need a degree from, an Ivy League school to understand how to buy a put option. It's the same thing of what I want to talk about here. I want to talk about selling covered calls. It's one of the safest, most popular income trades that's out there, right? It's so safe that it's, in 1992, when I took my Series 7 exam, at that point, it was the only option trade you could do in an IRA account. Why? Because it added absolutely no risk to your portfolio. Your risk is inherent in the fact that you already own the underlying stock. So all you're actually doing is lowering your cost basis and getting paid to do it. So selling covered calls is a great way to grow, to generate, extra income in your portfolio. I can ask you how many of you folks actually trade covered calls? You can type in either yes or no, but I am going to walk through the anatomy of the covered call, the reasons why we do it. This is an actual trade we did in our coaching group. Ultimately, it will be. So a lot of folks are typing in. So it looks like right out of the gate, pretty good mix of yeses and nos. Starting to see more yeses. Tim says occasionally. Melody says no. All right, so a pretty good mix there. But I'm going to walk through the anatomy of the covered call. You buy stock or you already own it at $47 per share, right? 47. If you buy it and sell the call simultaneously, it's called a buy right. If you own the stock, 100 shares of the stock. Here's what a covered call is, and this is for the folks who maybe aren't familiar with it. This comes from a guy named Lee Lowell. He wrote a book called Get Rich with Options. This isn't the full quote, kind of paraphrased. but it's the most logical, reasonable, easy to understand definition of what a covered call. There are people out there who will pay you money today for the right to buy your 100 shares at a higher price at a later date. They're willing to pay you today to take your stock away at a higher price. That's what, when you buy a call option, you're buying the right to buy 100 shares of stock at a certain price by a certain date. The value of a call option rises when the value of the underlying stock rises. Okay, so that's my quick call option lesson. So, for example, I own the stock at 47. Somebody out there is willing to pay me $2.27 a share, 227 bucks, to take my stock away from me at $49 a share. So I can make not only the 227, but a couple of bucks on the capital appreciation level as well. Let's take a quick look at what could happen here when you do a covered call. Now, the stock can go down. The stock goes down slightly, let's say. The profits from the call you sold give you a cushion. In other words, you lowered your cost basis. You got paid. That money's yours. What happens during the life of the trade will dictate how much of that money you could keep, but it's yours. Right? You would likely still have a stop criteria in place for the stock, just as if you'd bought it, in your regular portfolio. So it can go down a little bit and you could still not lose money. The break even is down. It could go sideways, which is fine because you'll get, if it expires below that $49 strike price, you get to keep 227 bucks. Plus you still own the stock and you could make a decision. Either I sell another covered call on it, or I just close the entire position and move on to the next one. Remember the goal here. It's not to watch the stock go up to, 120 bucks. Just one trade and a process and a technique that allows you to generate a steady income. Keep that in mind as I go through. And then finally, what if the stock takes off? Great. You can take in the max profit. You keep the 227 bucks plus the $2 of capital appreciation. On a $47 stock that's over 400 bucks, that's, close to a 10% return in about 30 days. And you can't look back if the stock really takes off, and be mad that stock was called away from you, because you will, at expiration, they'll take that stock away from you. He is remembering what your objective was when you did it. So like I said, this was EQT done, this was a little while ago. We owned the stock at 47. We sold the 49. The stock went up slightly based on our risk management techniques that we use in our coaching group. It closed the trade with a gain of $304 in less than 1 month. It's just one trade as part of an overall process generating that safe, steady income. So that's the power of covered call. In fact, one of our students, Jerry, told us that prior to learning this income strategy, he told us, and again, these are his words, his investing was hit or miss. He really had no methodology. After learning our covered call income strategy that we teach, he's now generating over 2% per month, which adds up if you have your dividend portfolio, your growth portfolio. So what would that extra income allow you to do? You can write it down. You can type it in if you want. You can write it down on your note. What would that allow you to do? And an old colleague, real quick, to just, we'll start to wrap up here a little bit. A few more things, important things I want to talk about. But he used to say, he sold a lot of covered calls and generated income that way. And even his wife knew that's what he did. And he remembered the day she called down to him. She said, hey, go sell some covered calls. The refrigerator just blew up or just stopped working. We need a new refrigerator. Go sell some covered calls. That's always a funny story he told. But there's that strategic shift, right? You have to go from not enough or no income, right? That rusty faucet here, not giving you any income, to a steady flow. So when you implement between dividends and doing the covered calls with the proper system in place, you can get that steady flow of income to help you live that retirement that you choose. Now, I know that you guys showed up here today for a few reasons. I want you to stay with me for just a few more minutes. I appreciate you taking the time, but I believe you showed up because maybe the last couple of years has been tough on your portfolio. Maybe it's pulled back a little bit. Maybe you are worried about the income stream you're trying to replace, maybe a paycheck or just, grow that income. Hopefully, I'm sure this isn't the case for most of you, but maybe you fear you have to scale back your lifestyle in retirement. Maybe you're here because you're doing okay right now, but you're not quite where you want to be. Maybe things are okay and you're doing well, but you want to make it better. And maybe you're here just simply because you don't have that plan to get there. But today, I hope that you learned that it is possible to take control of your retirement. Right? There are things that are out of our control. We have to understand that. But you also have to understand there are a lot of things that are within your control. There are process and techniques and plans that you can implement. When you have a clear plan, you take control. Hopefully, you learned here today that you don't need to worry about the market collapse when you're able to understand the market trend indicators that we have and understand how to put that strategic defense system that I talked about into. So you go from being unprepared to knowing exactly when and how to protect your net worth. We talked about that steady growth, right? Instead of spinning your wheels, buying the right stocks at the right time and managing them the correct way. Listen, again, I said there'll be drawdown. You can't avoid that, but you can mitigate it and you can lessen it by properly managing your portfolio. And then finally, we talked about income. Between dividends and covered calls, you get that steady flow versus, looking at the balance on the day you retire of your nest egg and saying that's it. I'm never going to make another penny. I hope I can live on what I have left. It's absurd. Don't do that. The main thing I hope you learned today is that the secret to building wealth, transforming your legacy, and living financially free really comes down to the three P's, the investing model here, right? These three core pillars of growing your portfolio, providing income, and most importantly, preserving that capital. So that brings us to an obvious question that I hope that you're asking yourself right now. And that is, how do I create this type of system in my retirement? How do I do that right now? I believe you have a choice. I believe you have a choice. You can do nothing. And the old saying, the same old thinking is going to get you the same old results. Year after year, you're going to be in the same place year after year, worrying if you have enough money to retire. You can choose to do it alone, maybe put together some of the ideas, do some research, and try to put it in practice, learning by trial and error. But as our carpenter friend here, novice, it appears, this is what happens when you try to do it by trial and error. Or you can choose to do what our friend Jerry did earlier, some of our other folks who sent us notes and letters about their retirement, and thousands of others have done, and that is get right to the solution. Why do all the work on your own when there's training that's available that allows you to bypass all that trial and error and get you to success much quicker? Instead of taking, the road more traveled. Say the shortest distance between 2 points is a straight line, right? Chevy Chase said in Caddyshack, in the opposite direction. Right? Learn how to take that shortcut. That way you get your retirement on solid footing as quickly as possible. That's the key. So what I want to do, if you'll give me just 5 more minutes, I want to give you the plan that if you and I were to work together for 5 weeks, there's 5 modules, literally you and me in a room every week for the next 5 weeks with our mastery sessions. Here's what I would get you to do. And it's a step-by-step roadmap to a secure retirement called Retirement Portfolio Transformation. Before I get into that, it's important to understand that this quote from Albert Einstein, he said, everything should be made as simple as possible, not simpler. So it's important to understand that it's not a get-rich-quick scheme, not going to double your portfolio in 60 days. You do have to put some effort and work into it. I'll be there to work with you, to coach you, to teach you the VectorVest aspect of it, to give you considerations that fit your current situations. But you have to understand it's not a magic pill, right? You got to put some effort and some work in it to see the results. And I believe that by transforming your portfolio, you'll be able to live up to those goals that we said earlier. Transforming your legacy, a better life for you, your children, your grandchildren, financial freedom that awaits. So again, it's called the Retirement Portfolio Transformation, a step-by-step roadmap to a secure retirement. Now, the easiest way for me to explain the course to you is to kind of map it out. There are 5 modules that are currently found in the VectorVest University you have access to, and then we have what we call mastery sessions to review and answer any and all questions, and we do that live. Let me walk through each module very quickly. Again, I appreciate you taking the time. Stick with me for. The first is Retirement Foundation Builder. This is very important. You have to be able to set clear goals, objectives, initiatives that you put together, right? We teach you in the module to treat your investing as a business. You may be familiar with the SMART goals. I refer to those and how they help in your building your portfolio, creating your own vision statement. Because remember, you can sit there and set your goals and objectives. Okay. But you have to understand that a goal or without a plan is just a wish. It's an old quote. I don't even know who to attribute it to. I wish I could. I read it a long time ago. So true. Goal, an objective that you want to reach without a plan to do it is just a wish. So keep that in mind. Module 2 is where we start to talk about a growth portfolio. Remember, increasing your capital appreciation, finding the right stocks, the best candidates, knowing when to buy them, and then most importantly, knowing how to manage them once we do. So that will transform your portfolio by building on your growth. Okay. Dividend growth portfolio, we generate a steady income. Again, we're doing the same thing, but doing it for dividend growth. We're identifying the best quality dividend payers, managing them accordingly using the VectorVest program. Now in module 4, we'll complete that second step of providing income, right? Dividends is first, but we'll talk about our go-to option income trade, which is covered calls. And I didn't have time to really talk too much about it here, but we do talk about selling put options as a form of generating income as well. If you're familiar with options, you know that the risk reward profile of a covered call and selling a put, shorting a put is the same, right? The risk reward profile is the same. And so they're similar trades, and we talk about them in module 4. But again, it's just a way to continue to grow your portfolio, generate income after retirement. And then finally, as we talked about, and I spent the most time on and tried to emphasize the importance of preserving your capital. You're not prepared for when the market goes against you. All of your work of growing your portfolio is wasted. Massive drawdowns means you got to sit a year, maybe 2, just to get back to even. Remember, you lose, I'll use 50% because it's easy math on my brain. You lose 50% of your portfolio, right? You have a drawdown of 50% on an asset. You need it from there to double, to go up 100% just to get back to even. That is time use of your money down the drain. Not what we want to happen. So we want to help you preserve your assets here. Okay. Profit, provide, and preserve. Now I'll get to some of the specifics here just to get this out of the way. Here's what I'd like to do. I want to give you full access to the Retirement Portfolio Transformation course. We put it together in a self-paced, recorded atmosphere found in the VectorVest University. Now, just this is the value. This is the full course, but you're going to get a much better price. Stick with me. Okay, we're going to give you some bonuses along with that those recorded modules with, and I'll show you the website, the university and what's involved there in just a second. You're also going to get 5 live mastery support sessions that we do during market hours. So you have the modules that you learn from that are archived for you. Then once a week, we do a live mastery support session. We review the module, we answer any and all questions, and illustrate it in a live market. Okay. If you can't make it, don't worry. We record it and put it into later that same day. It's in the course resources, and you'll be able to watch it later today. The next bonus that we give are 5 weeks of access to my members only group coaching sessions. The retirement coaching group, we meet every Tuesday. We take all of the aspects I just talked about, and in the real world with real money, a couple of them are model portfolios. One of them is live VectorVest money. And we look, do we need portfolio? Do we need, capital preservation? Do I need to buy some puts? Is it time for some covered calls? Is it time to fill some positions in our growth port? Things like that is what we do. That's what we do in the coaching group. So you're going to have 5 weeks of access to that as well. Okay. And you'll see the process we use to set up our income, our covered calls and our protective puts, and how we build and manage our portfolio. We have a price of $5.95. It's the early bird special. It's good till Monday at 5 o'clock. But because you guys were kind enough to join me here and stick with me, if you go to vectorvest.com/transform, which John was kind enough to just put into the chat box, you can click there and save another $100, and you'll have it at only $4.95. So, and you get, by the way, a 1-year access in the VectorVest University to all of the course resources, the recordings, slides, and any other sheets, spreadsheets, or things that go with it. Okay, go to vectorvest.com/transform. Our fast action bonus. It'll be up for a few minutes after we're done here. John and I are going to stick around and answer any questions that you might have. Happy to do that. One important thing though, okay, this fast action bonus, right? We are so confident that this is going to help build that foundation for you that we do offer a 100% money back guarantee. So after the course is over, if you show you've done the work, you got to at least watch the classes, the recordings and things, and you're still not satisfied, if you determine it wasn't for you, we'll give you your money back, 100%. So they talk about, there's no such thing as a risk-free trade. This kind of is, right? Take the course, do the work, build that foundation. If you don't like it, we'll give you your money back. Okay. All right. Flag that. Michael, I'll come back to your question in 30 seconds here. They say that the best time to plant an oak tree is 20 years ago so that you can be sitting under it now to enjoy the shade, right? Somebody type in, what's the next best day? What's the second best time to plant that oak tree? Who knows? Yeah, today. Today. It's never too late to build to build and manage your retirement portfolio. Ask yourself, how much is it costing you not to do this? How much is it costing you not to do this? Now I can go all the way back to 2000, 2008, 2020. Go back to last month. I can go back to August of this year. If it costs you more than $495, right? Let's fix this once and for all. Let's make it so you don't have to experience those huge drawdowns. Let's make it so that this is the year you begin to safely grow your retirement, generate income, and understand how to protect it and be prepared for those market turnovers. If it costs you more than $495, you can fix it by coming here. So if I click on that link that John put in, the VectorVest transformation, just real quick, it'll bring up this web page. The regular price for the course is $9.95. That is the general price of the course. $5.95 is that early bird. You can click that link now and get it for just $4.95. Money back guaranteed. The, the elite pricing, which you can do at any time right up to when the course starts, is going to be $497.50. Right? It's half of the $9.95. So if you're an elite subscriber, you can do it that way. If you click the purchase course now button, it's going to take you into the template that allows you to enter. So if you're not, and I know most of you are VectorVest subscribers, if you're not a subscriber, you put in your basic information here and you'll get the proper steps to get it. By the way, if you're not a subscriber, you get a free 60-day trial to have through the life of the course of our intraday program. Sorry, I didn't mention that earlier as one of the bonuses. If you're not a subscriber, fill in this information and you do get access to work through the course, a free trial period during the course. If you are a subscriber, simply click here to sign in and it'll walk you through the steps of signing up for the course, at which point you will receive an email with all of the instructions leading you to what you need to do to get instant access to the course. You'll get instant access to the course. And what the course looks like is, bring up the course for you real quick. All right, I thought I had it up, but I can pull it up and just Retirement Portfolio Transformation Course. This is what it looks like inside the VectorVest University. Okay. You have all of the recordings I talked about. These are the modules. We have a welcome video, module 1. I did it a little differently here. I break down, instead of one long video, we talk about treating it like a business, the 3 core strategies, knowing when to buy, what to buy. And then the mastery session from the last launch is still here, right? That's the mastery session from back in August. I have the calendar for our upcoming live sessions. That day we record this. If you can't make it later that evening, the new session will be in there. Okay, that's how we do that. Then we have our bonus modules. We have an extra bonus module where our colleague Ron Wheeler, one of the best instructors and traders of credit spreads, will come in and show you, take you to the next level, talk about trading credit spreads using options. And then, as you see here from the last launch, our coaching group recordings are in here. Now you're invited to the live session, but we'll put those new recordings in here each week. You also have other resources here. We have the slides. We have an allocation cheat sheet, dedication, goal setting cheat sheets, and all of the slides that you need. Okay, so there's a lot of information. You get access to these recordings for a full year. Okay, and as our friend Rob from earlier talked about, he got, once he lost 40% of his retirement portfolio, he came back, uses VectorVest 15 minutes, maybe a half hour a day, manages a retirement portfolio, and he got back on his feet using our program. And then real quick, we'll answer any and all questions for those who have them, but this is a quick calendar of our mastery sessions. They begin on November the 20th. They're going to be every Monday at noon Eastern time. We will meet live and we can go into the VectorVest program. I go into Thinkorswim, that's the broker that I use, and we'll illustrate all of the things that we learn in the module. We'll actually illustrate them here. And then on Tuesdays, right, this section is the retirement coaching group, again, which you'll be invited to. Our new coaching room. It's really cool to come into and be able to interact with other members. And again, we look at real time, what's going on, what do we need to do to build, manage, and protect our retirement portfolio. So you'll have access to those 5 sessions as well. Ron, I'm sorry, I'm hesitated there. I was reading your comments there. And yes, this is where, right? This is Ron said, I'm over 65. I have a good amount of money invested with Edward Jones, who doesn't protect for the downside. Because of that, this course would be for me. And yes, Ron, click on that retirement, vectorvest.com/transform. Join up. You'll get an email. You'll get access tonight to all of those modules. Watch them at your own pace. And then starting on the 20th, we'll go back and review everything that you were able to learn from. Yeah, you're able. Um, okay, I'm going to take a breath. I'm going to ask John to jump in. If there's any questions that John, I know John's been answering a lot of questions. If there's any, John, that I've missed, you can give me a shout out. We'll give everyone a few more minutes to type in any questions that they might have. And Ron, if you can't make the mastery session, like I said, we record it that day. Later on that late afternoon, early evening, it'll be archived in the resources, so you'll be able to watch it there. Hey, John, thanks for helping out in the background there, answering a lot of questions. I appreciate it. I did. I know you were answering questions, but I came into what it looks like in the VectorVest University when you sign up. You'll get an email directing you right into the resources here. And again, the modules, the welcome videos there. Then each module is broken down into. Again, I did them a little differently. I did short videos on each topic instead of one long one. The last mastery session, see, it lasted an hour and 14 minutes. That was in August. When we do the first module mastery session on November 20th, later that day, this will read November 20th, 2023, and you'll get the updated. We also, again, have our bonus modules, our coaching group recordings, if you can't make that. And as I noted, all the resources here. Mark, thank you for taking the time to be here. Appreciate it. Well, John's good. Go ahead. Oh, without a doubt. Yeah, like I said, it's all, the modules are archived here already. By November 20th, you can go through all 6 of them or 5 of them, right, before we even get to the live mastery sessions. It's a self-paced learning. But as far as the live session goes, as I noted, right, you can see the date of this mastery session for module 1. We did that live. So what would have been like April, May, June, July, June would have been what this said on August 21st. We do it basically every 3 months, I think, every 4 months, whatever it might be. On that day, on August 21st, that evening, we put this live session in. So you might miss the live session, but you'll only miss it by a few hours. So yes, you can certainly prosper from the live sessions as well. That's all there for you in the VectorVest University. Yeah, for those, I know a lot of there are folks from Australia, from Canada, without a doubt, using the VectorVest. That's why we have the program in Europe and UK and Australia and Canada, because the core basics of the VectorVest program work globally, right? They work across the board. I mentioned earlier when I was talking about it, the difference is comes when it comes to the option side of it, right? You have less tools to use, but I know there are some, right? I know you can buy put options in Canada. I know it's difficult. I believe there's ways to do it in Australia. I know the UK is tough and Europe is tough. There are ETFs, contra ETFs that play the market to the downside for you. That's the only difference. When it comes to building and managing a growth and dividend portfolio, nobody's going to do it better than VectorVest, regardless of what country you're in. The difference may come a little bit when it comes to By the way, as we finish up on the questions, if you're here in the room and you did sign up, do me a favor, type in "I'm in" the chat box so I can remind you. You're going to look for an email that's going to come in just a couple of minutes after you sign in, and it's going to give you all the directions you need to access this page that I'm showing you here and to get you going. I'm sorry, John. Any other questions there? Yeah, absolutely none. And before I get into that, Ron and John, thank you. Both typed in, "I'm in." Again, keep an eye out for the email, and if you don't see it in a couple of minutes, check your spam. Sometimes it'll go to the junk or spam folder, but it'll give you all the directions you need to get in there. And so anyway, John, as far as the question of do you need a level of options experience? My honest answer to you is no. That's what we're going to teach you. We're going to teach you. We're not going to go through an entire options course. We're not going to sit there and give you all of the theoretical, definitions and go into a 6 module options course, because for these two trades, you don't need it. We're going to tell you what a put option is. We're going to show you, I'm going to illustrate it live for you, how to go in and buy a protective put. Okay. I'm going to explain exactly what it is. Same thing with a covered call. Covered calls are the most popular, most used income trade that there is. Now, in the bonus section, Ron's going to show you some great ways to use credit spreads. They're wonderful. It just happens to be the most popular one, the easiest one to covered call. And we're going to show you exactly how to do that. So I will go far enough to say that you really don't need any options experience. But as I said earlier, you do need to be willing to put in a little bit of effort to understand what the put option does. We'll teach you. We'll answer every question you have on it. And before we're done, you'll know exactly how and when to use it. Both the put options and the covered call. It's a critical part. I believe it's a necessary part. If you're taking the responsibility of building and managing your net worth, your hard-earned money, it takes a little effort, a little work to understand, how do I buy a put option on an index that tracks, a major, an ETF that tracks a major index? I'm going to show you exactly how to do that, because I think it's critical to the success of building and managing. One protective put in the last 2 years. We've paid for this course several times over. If you're not doing it now, you should, for those who are left in them. Yeah, as I said earlier, long time ago, the only option trade you could do in a retirement account was a covered call. Now, I will qualify that by saying, you need to check with your broker. I would be extremely surprised if any mainstream broker in this day and age would deny you the opportunity of selling covered calls and buying protective puts in your IRA account. If you use one of the mainstream brokers, you're definitely going to, well, I'm 99.9% sure that you will be able to do it. Now, if you have, a broker maybe that's not mainstream through a bank or something, it might be a little different. Check with your broker. If you use, E-Trade, Thinkorswim, Fidelity, Schwab, they're going to allow you to. Well, that's great, Ron, to see. Been trading for a long time, been with VectorVest for about 2 years, Ron said. Pretty familiar with options. I think it's great, Ron. I think that, um, we keep it simple. We answer the basic questions, but, for folks who, we answer all questions. So whether it's the most basic question or, hey, how can I do this? We're going to answer them all. So it's good to have you. I talk a lot. We're about an hour and a half in. I'll stay for another minute or two, John and I. If you have any questions, comments, concerns, if you're interested in joining the course, ask your question now. Take advantage of that 495 action bonus, save $100 off it. Your first protective put. Take advantage of the Act Now bonus. It's like buying a protective put. You just $100. Just lowered your cost basis. A position. Yeah. Yeah. All right, folks. I'm going to go ahead and wrap it up there. Thank you so much for taking the time. Listen, even if you don't sign up now and you change your mind, it's still going to be just the $5.95. So you have that till Monday, 5 p.m. If you change your mind, remember it's always going to be money back guaranteed. It will improve your knowledge. It will make you a better investor using the VectorVest program. It will make you a better retirement portfolio manager. I hope you take advantage of it. If you don't, thank you for taking the time and maybe next time. But we look forward to working with you in the future. Thank you all so much for sticking around, for taking the time. I'm going to go ahead and wrap it up here. And we'll finish up. Ron says this current course just being taught to the group that signed up for it tonight. Well, we got a couple of these webcasts throughout the week, Ron. Hopefully we'll have a nice group. We usually get a pretty good group of folks over the week or so that we invite people into the course. So yeah, the coaching group is separate. When you come into the coaching group, there's more people have taken the course. But yeah, that's what we do. All right, folks, please stay safe, stay healthy. Thanks for taking the time to be here. If we don't see you in the course, we look forward to seeing you next time. On behalf of John and myself and VectorVest, please have a great evening, have a great week. We'll see you next time. Bye for now.